us on the show. We have VP Nandakumar, who is the Chief Executive Officer of Manappuram Finance, joining us this morning. A very good morning to you. Thank you so much for joining us on ET Now. And let me directly dive into your Q1 earnings. If you look at the consolidated basis, on a consolidated basis, that is, NI and PAT have gone down by 7% and 35% respectively. Could you tell us what exactly impacted the performance in the quarter gone by for Manappuram Finance?
One, the efficiency is improving. In all the business segments, the efficiency is improving. The business has grown year on year. The business has shown considerable growth. Quarter on quarter also, there is growth. The standalone profit PAT has improved to 290 crores. And the standalone ROE has improved to 14.4%. But in the major subsidiary, there is a minor loss. So the consolidated ROE is around 13%. And the profit is consolidated profit is 282 crores. But now this is the hope. Now you see the new regulation in MFI. The net interest margin cap is removed. And we are at the end of the tunnel. As far as MFI's SIG portfolio is concerned, it is towards the third quarter, all we learned. And this year also, we see the hope for last quarter reporting a profit. And in the preceding quarters, the business will be as normal as it had been pre-COVID. You see, the major hit has come from microfinance portfolio. That also now it is 7,000 crores. Out of that, the pre-COVID portfolio is less than 1,000 crores. So major portion is post-COVID, which is showing a collection rate of 99.9, nearly 99%. So these things are crystallized, and the book has become clean now. Which has been the problems had been some restructuring had been there, etc. etc. Some of the customers were not able to make up, etc. So we have been providing for that continuously, and it is coming to an end, and we are not coming out of that. Pre-COVID, the COVID time stress. So the things are improving every way. The pull down factor.
Okay, I take that point. And now we understand the reason for the performance in the first quarter, but help us understand the path forward. What's the demand for gold loans looking like at the current juncture? And do you see that demand, if the demand in fact is strong, translating into disbursement as the economy recovers?
Slowly. The gold loan is showing, the portfolio is showing some stagnation, primarily because the gold price has gone down. But new customer acquisitions are continuing. So now, at that level, it is getting, at this price level, it is getting stabilized. So going forward, we hope things will improve.
Right. Let's talk some more about what's exactly happening in growth front. If you look at the growth, or rather we talk about the bottom of the pyramid, we are actually seeing growth picking up on that particular front. How has the recovery been in rural? And if you could also shed some light on the asset quality as well as the provisioning.
See, if you look at our provisioning numbers in gold loan, it has come down. The net NPA also has come down compared to the previous quarters. So asset quality, there is improvement. So the bottom of the pyramid, the demand is yet to pick up. It is slowly picking up. It is not only in gold loan. If you look at other segments also, for example, the two-wheelers, the sales is down. Even the small cars, the demand is down. Only the mid segment and the premium segment we see the demand picking up. So it takes some time because with the economy improving consistently, so we hope things will improve. The inflation also has some problem in that segment, the lower segment also. So we all hope that things will improve going forward because whatever has been planned in the budget, we hope the construction, etc., is coming back very fast. And education sector with the holidays, with the new admissions, etc., is over. Now college admissions are also taking place. The post monsoon, we expect the sowing season, etc., etc., would require a lot of money. So these are the seasons where the demand picks up. We hope, from October, November onwards, the demand will pick up.
All right. Could you also talk to us about the margins in the quarter gone by and give us an outlook on funding costs as well as the pressures that you've seen on margins? Can we expect the margins to expand in the coming quarters?
Yeah, the policy rates, if you look at, there is 90 bits of hike. But our cost has gone up, our average borrowing cost has gone up by 30 bits. Now we feel like even if it goes up by another 50 bits, our situation won't worsen because we have the high cost debts which are coming up for renewal in the near future. So when the high cost debts are redeemed, we are able to shift that to a lower cost funding because the cost has come down even in spite of the recent rate hike from the pre-COVID level where we have made the large borrowing at a higher cost. These are all due for redemption. And for redemption also, we have sufficient liquidity, we have enough bank lines. So this will, even if there is a hike of 50 or 100 basis points increase, we'll be able to maintain some borrowing rate somewhere around the same level as of now. And this will help us to improve the net interest margin in gold loan. And in Ashirwad, as the new cap has been removed, we have the flexibility to target a better ROA.
All right, Mr. Nandakumar, we leave it there. Thank you so much for joining us on the show to talk about the quarter gone by for Manappuram Finance and the quarter ahead for it as well. And that was the management of Manappuram Finance.